What's up, YouTube? So in this video we'll be going over the 930 model, and the last video I did 830. This video I'm doing 930. One thing I want to say is we did hit 7k subscribers, so I'm cutting my Patreon 50% for both tiers. So if you go there now, you'll see the discount tiers in the link below. So when it comes to 930, you really want to look for a market maker buy or sell model depending on what your levels are for your 15-minute, hourly, and daily. But on a classic market maker buy model for the 930, you do want to see a 930 take sell side in the current day, better in the previous day as well. You want to see a market structure shift in buy side, and you should be good for your 2022 mentorship model to your full terminus of liquidity in a market maker buy model. That's what you want to look for when it comes to the 930. So looking at this example here, you can see 930 takes liquidity here at 930. Price shifts higher, digging back down into this order block here, breaks higher one more time with another bullish order block here, eventually running to my 15-minute level and my buy side liquidity pool here. This is what you want to look for. You want to look for a 930 low in the day or high if it's bearish, or just a turning point at 930, but you want it to go to one of your higher time frame levels. That's how you use this 930. Your macros and silver bullet and everything's going to line up if you wait long enough. All right, so this is a bearish day and we have 930 here. So as you can see, 930 ran up, taking buy side here, then trading beneath this order block here, eventually running for your sell side liquidity being here. So the main thing about this is going to be your liquidity selection. I would say as far as like liquidity targeting and whatnot, that's not really for this right now. I do teach that in my Patreon. That's more of a Patreon thing, and how to pick the right draws of liquidity. But this should help you a lot in understanding how price turns around and moves from one point to the next. But looking at this, 930 here puts in a high, breaks down, order block sell, another entry for a sell down to here and here, giving you about 70-80 points. Looking at this price action here, I'm sure you can see it now. You have 930 open here. You have some nice old highs back here. You have a run on sell side here. You have a run on sell side again here. Market structure shift. Price returns back into this bullish fair value gap, eventually running to TP here. So let's see how much points this has to offer you. 140 to 60, but you can trim that down. So about 150, 140 points to the top. One thing I want to point out is ICT does say if your opening range gap is over 120 points, 100%, it's going down to sell side. So in this case, this was 280, 230 right here. Drop difference between the regular trading hours and electronic trading hours. So when I seen this, I was like, okay, well, if his logic is true, it should run to sell side. So when I came to my electronic trading hours, I already had sell side marked and buy side marked, and I was kind of in between both at the time. But I seen that logic he posted in this 2025 content, and I was like, okay, well, I'm going to trust it because it's already aligning sort of with a bias I have, and I'm ready to go either direction. I'm just going to react to price. We got the fair value gap here at a time I like, and price did run down for sell side, giving about 53 points, and that was pretty clean. In my head, I mentally took a long here, but I just do one trade per day. Like I don't wake up and say, oh, one trade a day every day. Like it's just one trade a day. So if I happen to get to my chart, I really just do one trade. I can do two, but either way, win or lose, I have to cut my risk straight down the middle of whatever I risked in the previous trade. If not a quarter. So that was just a quick pointer that I seen was actually pretty useful, is the 120 range. But you have to have a little bit more framework involved. You can't just be like, oh, it's 120, it's gonna go higher. It might retrace a little bit, and then you might miss the move. You know, just start off by picking the right levels. Having the right levels on your chart and what you should be seeing is the first step, because if you don't have that, it's gonna be confusing trying to blend these concepts together, man.